The Australian dollar was boosted by comments from the Reserve Bank of Australia's Governor Stevens that the central bank has likely paused the rate cut cycle. Stevens said in his testimony to a parliamentary committee that last year's cuts were already substantial and rates are at an appropriate level right now. He emphasized that there is already a good deal of interest rate stimulus in the pipeline, and the board judged that it was sensible to allow time for the rate cuts to do its work. Meanwhile, Stevens noted that the Australian dollar exchange rate is somewhat overvalued. But he warned that, you need to be pretty confident that it is seriously overvalued, or the market is behaving in some quite irrational way, before you would launch large-scale intervention. Separately, Treasurer Swan said he's beginning to see some of the signs of stimulus flowing from monetary policy into some of the non-mining sectors of the economy. The euro remains soft after yesterday's sharp fall on weak purchasing managers' index data. Traders are also cautious ahead of Italy's parliamentary election on February 24 to 16. Democratic Party's Bersani is still the front-runner, but polls have been showing that former Prime Minister Berlusconi People of Freedom's party continues to close the gap. Markets are expecting to see Bersani winning a majority in the lower house and forms a coalition with outgoing Prime Minister Monti in the upper house. However, markets are also complacent on the risk that scandal-mired Berlusconi might return to power. Overall, Euro-US dollar is still trading above the 1.3 psychological level comfortably, and we're still confident on the bullish outlook. Similar picture is seen in Euro-Yen, and recent price actions from 127.70 are looking corrective only. However, Euro-Sterling is starting to look heavy, well below the 0.88 level. Thanks to the comparative strength of both currencies, Euro-Aussie breached an important near-term support at 1.2805. We'd start to be cautious on deeper sell-off in the euro in crosses, which could trigger further pullback in Euro-US dollar and Euro-Yen. At a state council meeting, Chinese Premier Wen Jiabao announced that the government would accelerate measures to curb the country's real estate market. As in One News, the CPC government's press agency stated that the government would take various measures, ranging from raising the minimum down payment and higher interest rates for second home mortgages to putting a conditional ban on the buying of properties by non-local residents, as 21 of 27 cities monitored register sales of floor space more than 5 times the area of the corresponding holiday week last year and at higher prices. Meanwhile, 40 of China's 70 major cities saw property prices rise from the previous year, compared with 18 cities in November and 14 in October. The government would maintain, may increase, the land supply and boost the construction of the government-subsidized housing for low-income households. As in One also cited media reports that the government would raise down payment for second home purchases 70% from 60% and increase the mortgage rate 1.3 times the benchmark interest rate instead of the